Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. This week is a really big holiday to you guys because we have prepared really small reports as on the forex market and in the gold. Not really extended, but very interesting. And today we have considered the new release from the JP Morgan dedicated to the gold market. It's actually very exciting and contains a lot of important information where actually they explain how they come to particular numbers, why they expect, for example, 4,000 level, of course, on the gold market in the second quarter of 2026. So they have taken a look at everything on the demand on the ETFs, investors, central bank, hedging, some other issues. If you're interested, I post a report of the JP Morgan now Telegram channel, so you could read it in a whole. But we have extracted the most important, by our opinion, things and put it in a report. So it's really for all gold bucks, actually, it's just very phenomenal and very interesting. Even the last information, they suggest that gold could go right to the 6,000. By the predefined conditions. So they are extremely positive on the gold market, and just briefly consider the possible bearish factors pointing that they are not of the basic case for them. They could happen, but actually they do not consider it as very probable. And actually recent events that we see in Donald Trump policy is breaking apart in all subjects. Tariffs are dropped widely. The confrontation in the geopolitical arena on the Russia-Ukraine negotiations also shows no progress by far. Some tensions inside of the Donald Trump team also stand, so it's a very difficult situation, and it seems that we will not get any breakthrough in the United States finances in this year. So hardly Donald Trump will be able to improve situation significantly, but he has to improve. Otherwise, it takes a big risk to lose the intermediate elections to the houses in the beginning of 2026. So, but all the stuff is theoretical and long term. Let's go to practice. So on a daily chart, actually, we do not need to change anything. We just keep going our journey with the grubbers that have been formed. So nothing to speak about existing positions. So if somebody of you already have the position, you just could keep them, see what will happen based on these grubbers. The most interesting stuff, practical issue, that how we could join the downside action, what particular patterns we need to keep an eye on, what the levels, and where we could potentially take and could get the second attempt to go short. So daily chart can't answer on this question when you take a look at the intraday charts. For now, here we could say that the target of the grubbers is minimum target, so 32, right there. It's also very close to the oversold level, so hardly we will get any straightforward downside breakout this week. So it would be better to use this level as a possible floor for coming week. On the 4-hour time frame chart, it also not many things to change except the one moment. So here we still consider this particular shape of the price, the butterfly, and currently the major concern and question, what to expect from this action? Whether it will be, as we suggested, a bit higher, because we've got the reversal candle here in general, nice acceleration, or market could turn down right from this point. So where we should take the short position. So the most conservative approach suggests that you should wait and stay with our first scenario, because just simple explanation that the level where you potentially could take the position stands higher. But maybe most suitable decision is to split the position in parts. Here you could see that MACD comes very close to the price. And if we will get the grabber on Monday, it means that market should go below these lows, which is automatically tells you that probably that will be the shorter butterfly wing and could start earlier. It absolutely doesn't impact in any way on the target, but it makes impact on the point where right wing could start if we will get the grabber. So it means that the first conclusion that we could make from this analysis is we're watching on the 4 time frame chart and controlling appearing of the grabber on the MACD. So if it will be formed, it's definitely makes sense to take at least some part of your position. If you would like to split, so take the 50%, for example. If grabber will not be formed, in this case, we're watching for our initial scenario. So we're possible for the upward action and higher standing top of the right wing. Because on the hourly chart, we have very similar picture, but in opposite direction. So take a look. This is our potential hand shoulder shape that we have discussed on Friday. It has lost a bit shape, so we do not have the clear shape of the hand shoulders. It's a bit, skewed to the upside without clear right arm. But at the same time, we once again see that MACD comes close to the price action. Hourly chart is shorter, and it means that information about the bullish grabber we should get earlier and faster than information on the bearish grabber on the 4 time frame chart, right? And if we get the bullish grabber here, it significantly increased chances that we will not get any bearish grabber on 4 time frame chart. Appearing of the grabber on the hourly tells that market should jump above this area. But in this case, about 33.50 approximately. But in this case, market already will be on the halfway to our predefined 33.75 target. So this is our primary level to watch for possible taking the short position with the grabbers. That's in towards what we have on the gold market. This is the plan. So just as a bottom line, once again, we're keeping an eye on the 4 time frame chart and the hourly chart. On both charts, we're watching for potential grabbers. So failure on the hourly chart, moving down and appearing grabber on the 4 time frame chart tells you that this is the point for taking the short position, either on a whole trading lot that you're trading on the gold or at least at the half, so 50% of your trading lot. If conversely, we have the grabber on the hourly chart, market keep going higher, and then you see on the 4-hour time frame chart that's obviously you can't get the grabber, then you just wait for a high standing level around 33.75. Next fib resistance. And also you have to keep an eye on both scenarios. For instance, how it could be if the upside reaction will be fast. For instance, it might happen that here you could get some fast action and sharp reversal. In this case, you could get spike up on the 4 time frame chart and grabber still could be formed. That might be a really perfect combination. So you could get not only the short position, but at really high standing level. That's the reason why it makes sense to split the position in parts. So this and towards what we have in overall gold market currently, I would say it's absolutely exciting. So based on the JP Morgan comments, based on our analysis, what we see and what we discussed in previous reports, and even on technical pictures, if you compare what you have on the gold with the setups that we have on the euro, you could see that on the gold we much more often get clear patterns for trading, more active market, and actually it's more interesting for trading. So let's keep watching what will happen on Monday.